interviewing Tom Donohoe with SunTrust. And Tom works in the Northern Virginia area and has been a loan officer for a long time, cranks close to $4 million a month on average. And Tom, before we actually start, I always ask the same question because everybody has this kind of a primal interest in where people came from and how they got into business professionally, and maybe what you did before it. So I thought we'd start off, and maybe you can tell us a little bit about yourself.
Sure, John. Well, as you may or may not know, I've been originating loans for about almost 19 years, all in Northern Virginia. Prior to that, I sold real estate for Long & Foster. This was resales for 3 years. And then I sold new construction for a company called J.E. Robert, which was a condominium company in D.C.
I knew his father well from the land business maybe 30 years ago.
That's right.
And, of course, Joe started off, and for those listeners out there who don't know this, Joe Roberts got in with the RTC when all the banks were collapsing and offered to sell everything and put together groups, and Joe's worth about $1 billion right now.
That's correct.
So you knew Kirk Creasy and
Gary Greenfield,
yeah,
all the guys.
Well, that's a story for another time because the land business and condos, it was a wild and crazy business with that group years ago. Exactly. But anyway, sorry to interrupt, but I couldn't,
That's fine. The experience I had selling both resales and then also new construction was really invaluable to me in changing over to the mortgage banking business. I saw that side of it. I saw, which I didn't think was the most professional business in the world. Spoke to friends of mine in the origination side, Ray Rayback in particular, who I used to do business with. Also a few fellows that are now still in the mortgage banking business. I think, John, you weren't in it at that point in time. But Jay Elder, I used to give loans to, Gary McInturf, and so forth. So saw how much more professional I thought they were than the realtors that I was doing business with, and made the switch in 1983 and had not looked back at all.
Who did you start off with when you got in the actual mortgage?
I worked for Gold Dome, which was Buffalo Savings Bank. They took over Steed Mortgage in 1983, and I started in January of '83 working for them. And I interviewed 5 or 6 companies, and the reason I chose them was I pretty much could pick the territory that I wanted, I should say, which was Arlington and Old Town Alexandria. There wasn't anybody calling on it. And as luck turned out, they were the first one to come out with a 1-year ARM when rates were, fixed rates were almost 12.5%. They had a 1-year ARM at 9.5%, and it was, basically order taking for probably about a year. So I was able to make a lot of contacts through realtors that I knew, and then on top of it, I had a great product to sell, and established myself as an originator in Arlington resale offices and also Old Town Alexandria. So the timing was perfect, starting with Gold Dome.
Did you, when you started, did you call exclusively on realtors? Did you go after new homes, or
I did call exclusively on realtors, and I continued to do that 83, 84, 85. I did switch over to a new company in 85, and it was a startup company, Wilson Mortgage. Fred Wilson, who's been in the business for years, asked me to come over and Ray Rayback was there also, so we were sort of starting up, and I was fortunate enough to become a partner there, which was a stockholder, which was valuable in the long run, but I still continue to call on realtors. I started losing a little interest dealing with the realtors beginning of 86 when just seeing they were so deadline oriented, where if you made one mistake, even though you'd done 10 perfect transactions than before, you were off their list.
Well, that's nothing more than you're only as good as your last loan.
That is true.
That has never changed.
So in 86, I decided to basically only call on a handful of realtors, and I started calling on subdivisions exclusively. And I dedicated the first 6 months of 1986 just calling on subdivisions, meeting sales agents, introducing myself to builders, and that's what I've done, for the last 14 years, is just dealing with builders directly and sales agents on sites.
Well, I'm going to be, we're going to get into that, of course, in a lot more detail, but I'd like to zero in for those listeners out there that would like to get into new homes, that would like to spread maybe some of their realtor relationships around and focus on some builders, on just how you went about doing it specifically, because you're kind of interesting in the sense that you spent a lot of time dealing with realtors and then switched over into new homes. Most people, make that cut pretty early on. You did a little bit later.
Well, the emphasis that I had at that point, rates were still fairly volatile in the mid-'80s. Through Wilson Mortgage and such, we had long-term, and it was all fixed rates pretty much back then. They did do some ARMs, but we were able to have commitments that we actually sold to another bank, but we were originated. And builders were willing to, put fees up at that point in time to guarantee a block of money for 6 to 12 months. That would ensure that their subdivision would have competitive rates. You don't see that as much today. Builders paying for it. It's pretty much an individual borrower that would pay for it, protecting a rate. So I sold that. Also, we did some business with the Milton Company, which was a partner with Wilson Mortgage at that point in time, calling their subdivisions. And then introduced myself just from back then. You could drive around in Northern Virginia, a sign would go up, introduce yourself to the sales agent, and actually strike up a relationship to do their originations at that point in time. There wasn't any tie-in between the construction lender and the mortgage lender at that point in time, so it was just relationships with the sales agents that pretty much dictated the action. There were a lot more independent builders back in the 80s than there are now. Pretty much now it's all national and or large regional companies.
And a lot of them have mortgage subs, and I would like to, usually I don't move forward until a little later in the interview, but I think with the type of business that you're doing, the people that are out there probably going to be more interested in how you get and maintain your business today. So perhaps you would discuss relationships with builders and how you go about getting new business. Well, and maintain the business that you have.
There's probably half a dozen ways that you keep yourself in their eye, and the easiest one, I shouldn't say the easiest, but the one that most people start off as is the NVBIA, which is the Builder Association of Northern Virginia, has monthly functions in all jurisdictions: Loudoun, Prince William, Fairfax, Arlington, Alexandria, where builders will attend, to network with suppliers and or lenders. That was one primary way.
Would you recommend that people out there do that today?
I think it's a good way to start because you can see who goes to them. More suppliers probably go to those than the actual builders, but builders definitely go to them. So it's a good starting spot to basically meet people in the business, because even if you meet the suppliers, they can introduce you to builders they do business with. So it's probably from a just getting into it, it's a pretty good method to go about.
I like your idea, actually. I'd like to come back to that. You may not thought it was too important, but I happen to, and that is, this is a relationship business. We all know it, and you've raised an interesting point that maybe if you can't strike the relationship directly with the builder, doing one with a supplier who maybe plays golf with them every other week almost can be just as good when you get an introduction.
Definitely, and it's not only just the suppliers, but I have a contact right now that sells accounting systems to all different types of builders, from payroll to land management, lot management, and him and I network on who we deal with, vice versa. So there's all kinds of suppliers that you can deal with that know builders and give you introductions. And I've utilized that before. Probably the second one that I've used most recently is the construction loan, which, working for Crestar, we have a real estate finance division that lends money both for acquisition development and also for the actual construction loan. I work closely with 2 or 3 of our commercial account reps at the real estate finance division of Crestar, soliciting business from the builders that they're doing the construction loans for. and that's been a very, very useful tool also.
What would you say, and because I don't want to caution everybody here, I don't want to get into anything that's proprietary to your company, but what would you recommend to people who really don't have access to construction lending capital so they can do a construction perm or whatever?
Probably the other way to go is directly with the marketing companies. The marketing companies are the sales companies that sell the builders' projects if they don't have their own salespeople. To align yourself with them, both from a standpoint of programs or products that you have that are more competitive or better for the borrowers, both from a qualifying standpoint and or rate protection, which would be long-term lock-ins, which would protect the borrowers, because usually it takes 6 to 9 months to deliver a house, sometimes longer when it's a higher end and you're at the tail end of the project. So that is another method, is to solicit the business from all the sales companies and or the sales agents. And there's probably half a dozen major marketing companies in the area that sell most of the new homes that are not affiliated with the actual builder.
Yeah, like Long & Foster.
Long & Foster.
A good example. They have a Lewis & Silverman.
Yep, Lewis & Silverman's no longer, unfortunately. Right. They were taken over by Long & Foster. But, like a Mayhood, which does mostly condominiums and so forth. There's a couple other new companies popping up that are doing this. So that's the other source that you can go on. The old way we used to do it back in the East was to, check who was taking out permits on land for construction to get to the builder first before possibly any other mortgage company. We used to try that angle also. So it's a little research done on that. You can, the signs go up in neighborhoods, vice versa. You can also, do that, just sort of driving around on weekends looking for new signs to go up for subdivisions.
What do you find that's different about it? You work both ends of the deal, working with realtors where someone needs to move in within 30 days, and you're dealing with people in this business that, as you say, a builder may deliver it 9 months. On the other hand, it may not deliver it for 12 months, promising it 9 months. How do you deal with the long term when you're dealing? Let's say I'd like to divide it up when you deal with that purchaser first, and then I'd like to talk about the sales agent on a long-term basis, and then the company itself.
Well, what happens on my side of it is my pipeline tends to be larger than the loan officer that just does 60-day deals with realtors, because they're constantly turning their pipeline over. I build mine up with a project, and then they'll start closing 6 to 9 months down the way, and then you start all over again, getting other projects in the pipeline and build them back up. Probably the most important part of that is doing a very, very thorough job in the beginning to make sure the borrower has all the builders require, either a pre-qual or now a pre-approval letter, that the borrower has the funds and can buy the house. Even if something changes as far as interest rates and or they have to sell their house, they can still carry both houses and have the cash for the down payment. So the pre-qualification letter is what all builders require in the beginning, so they take that house off the market. They know it can still settle in 6 to 9 months.
Well, you used the word pre-qualification. Today you have pre-qualification, you have pre-approval. What are you getting? Are you getting the whole boat up front?
90% of the time I'm getting everything up front so I can get them pre-approved. With the online capability of Desktop Underwriter or LP, which is the Freddie Mac underwriting vehicle, you can do that on almost every program that we have now. So that's what we do, is we run it through on that after we take the loan application and then give the borrower pre-approval at a set rate. And we usually do it 1% above the current interest rate today. So we have some room to play around with. The long-term locks are also very important to these borrowers that are 6 to 9 months out, and we're seeing more and more people in the last 12 months actually pay a fee up front to protect their interest rate, so they know that if rates continue to go higher, they have a cap locked in.
Are you saying that you can offer someone a 9-month forward if they put up a half point or a point? Is that what you're saying? And
it's probably the lowest we have for 270 days. The lowest we really have is 1/4 of a point up. We just make the interest rate cap a little higher for a lower fee up front. So, and we do it for 270 days, and that has a float-down option prior to settlement. So rates come back down, the borrower can actually get a lower rate than what he's capped out at.
At the very end, 30 days into it, are you resubmitting him? Or are you just re-verifying the employment by phone?
Yeah, we just re-verify. What we do is we send a letter 60 days prior to settlement and update pay stubs and bank statements. So and we give the borrower at application this checklist saying, 6 days prior we're going to need an updated information on it, on him.
Do you find stuff kicks out at that point?
Depends on the price range. First-time home buyer, FHA, 6 months, 9 months, a year out, you probably lose 1 out of 4 for whatever reason, personal reasons, job change. The higher-end $500,000 houses rarely lose any at all. The borrowers, they were fortunate enough to get that house, and they're going to see it through. So it's the first-time home buyers we have the most difficulty because they have some situation they're dealing with, either they got to get out of a lease or a personal situation. They're usually a younger couple and/or singles, and you see those kick out a little bit more. So,
what about people that, and this because we're talking about purchasers at this point, what about purchasers that have homes to sell? How are you doing that? Builders, when you have something 9 months out, a purchaser certainly does not want to have a 48-hour kick-out clause on a contract going out that far.
Right. Well, what we're seeing is in the market today, this being 2000, and also the same in 99, where there was such a demand for new homes, especially Fairfax County, Arlington, there were no contingent contracts taken. So they had to be pre-qualified, carrying both houses, and they had to have enough down payment somewhere, either getting a home equity loan against their house, which is a product that we could do, and carry all those payments. Years ago, not even years ago, 3 years ago, there wasn't as much a demand. Builders would take contingent contracts and hope that the borrower would sell their house in that period of time and be able to buy their house. It just there was not as much a demand. So right now, there's some fancy footwork done on programs, either possibly no income verification where they can carry both houses and they have enough money to put down. We run them through on that to get them approved, and then if they sell their house in the meantime, which in this market is usually the case, then they're free of that debt and they get a regular loan. So
but you and I worked. You've been around a long time, and so have I. You and I know in some of these waves that, especially with new construction, these things can change, and there are a lot of people that can get hung out there with a home that they can't sell, and it doesn't take much for a market to turn. You're old enough, and I am too, to remember cases. I know I had one in particular many years ago where out in Montgomery County, I'll never forget it. I can even think of the name of the builder. I won't mention his name. He's still in business. He literally built a whole subdivision of townhomes. I believe they were close to 60 or 70 of them, and the market was so hot, he refused to sell any. He wanted to, because the things were bouncing up so fast every month. And the market turned with a vengeance as he got near the end of it. And he was pretty wealthy. He could weather the storm, but most builders could never do something like that.
That's true. You don't see that now.
No.
Because most of the builders that are volume builders are national and or large regional companies. The independent builders right now, with the requirements of the construction acquisition loans that the banks have, they're pretty thorough on demanding contracts for additional construction money. So you don't see as much of that. But occasionally there is a house that does kick out, and you're going to have that. And normally the approval that I have is pretty ironclad with the borrower, and it's a worst-case type approval, which means if they don't sell their house, they will have to lease their house, and then they have enough funds to put a down payment down to still obtain their new house.
Now that's an interesting tip for I think the listeners out there, because there is a way out of the box. You're right, under a lease scenario, they certainly don't like it, but it makes the deal go down, and of course that's what the builder, your client, that's what they care about.
Right.
They don't want to carry that construction loan for a day if they don't have to.
Yeah, you're right. So, and a lot of the builders that I deal with now actually have clauses in their contract that says if they don't deliver, don't settle on the day the house is finished, they start paying a penalty, and it's a per-day penalty. So the contracts right now, because the market is so hot, are favoring the builders hugely.
Yeah, and those things come in and out. All the things that you're talking about, where builders, in tight times, they'll pay up to $5,000-$6,000 of somebody's closing costs, even on a $100,000 home. Those things just tend to, disappear. It's just like getting free rent when you're leasing. In a tough market, they'll throw a couple months at you. When it gets real good, they don't want to talk about it.
That's right, exactly. And we're just in the last 18 months in a market where the builder is in charge.
Right.
Is really in charge there. And I don't see that changing anytime soon because there's such a shortage right now of homes that are, probably within 10 miles of Washington, D.C. That's where it's just unbelievable.
Right, exactly. Yeah, especially out in the high-tech corridors.
Yep.
In the Washington area. Let's shift the focus a little bit, and let's talk about the sales agents on the job and how you relate to them and what you would recommend to people out there that are looking to either enter into this business or doing the business and just looking for some tips. Mm-hmm. What do you do for them?
Well, for them, you have to really identify who is really making the decisions on the job.
Good point.
On some particular jobs, the builder gives the agents completely free rein on who they're going to use as a lender, or who basically decides what contracts to take and so forth. Those particular ones are usually a little bit more of a challenge because the way contracts are supposed to read, I shouldn't say construction loans are supposed to read, they really can't tie the lender to who does the construction loans. In other words, if the construction lender is has a mortgage company, you can't say they have to use that mortgage company.
So the agent, steering issues?
Yeah, there's a steering issue, so you're not allowed to do. That's actually illegal.
That's right.
So getting to know the agent is a combination of showing the experience level that you have. Hopefully, you networked with their company before. You know who is their manager and or president of their marketing company. So going from the top down usually works a little bit better by the agent saying that their president, working that way. Because you have to have a relationship there because you're going to be there for a good project usually lasts a year and a half. So there's a relationship that has to be built that will endure.
What do you do for them? I mean, do you go out and visit the project, take the ball game?
When I start the project off, there's you always make sure you set up an appointment. You don't drop in. Their time's very important. And ask them that can you have a half hour of their time to introduce yourself. And I usually have an assistant work with me, another loan officer that works for me, so they have 2 points of contact. So they can't reach one, they can reach the other. So you can review the programs that you think would be appropriate for their project, and then ask them what programs they think they might need, and go through your menu list with them. Always supply marketing material about your company, and then also loan application packets, which show what information is necessary from the borrower to get a loan approval. That introduction is done usually on site if there is a sales office open. If not, there actually are some sites now that are selling so fast they're not even using sales offices. They're selling just by having signs up.
Are they using realtors, putting them in multiple at 3%, 50-50 type?
I haven't seen that because I've seen there's one project I have right now. They just put a sign up and said call the realtor, and they're just selling off a sign, and they got a waiting list. They end up taking 90 names for 22 units. Mm-hmm. So right now it's almost order taking for new homes.
Mm-hmm. Are you finding a lot of the builders are working with realtors, or they have their own sales agents?
In the last 3 years, I've seen more builders have their own agents work directly for the builders. So they're not even agents then. When you work for a builder, a sales agent doesn't need a real estate license because he's working directly for the builder. So don't get that
commission either.
That's right.
They can go on a per unit, sell a $500,000 house and throw them $2,000.
That's correct. So we see more of that. That's a cost savings for the builder, not having a higher commission. So we're seeing more of that where builders are having their own sales companies rather than using marketing companies and or realtors. Mm-hmm. We really don't see too many realtors selling new homes anymore. We see most people that are employees of the builder.
What do you think of companies, the large companies like Long and Foster, which has a huge new homes division? Do you think they start to get shut out in markets like that?
I would say yes, because some of the sales agents that work for Long and Foster are not always the strongest agents. We're seeing the ones that have worked in new homes, longer for the old marketing companies, like you mentioned before, a Lewis and Silverman, a BMI, which is no longer in existence, that just sold new homes for the local builders. And there's still a lot of veterans out there that now are shifting around, working directly for the builders.
For the builders. Well, let's shift our focus a little bit to the builders, because ultimately you're dealing with purchasers and you're dealing with sales agents on the job, which, as you correctly surmised, don't have as much power as they used to in this kind of market. But the builders rule right now. And so perhaps you would go into how somebody that would like to get into the business or improve the business they have, what would you recommend they do in relationships with the builder?
Well, they have a couple choices. One is to work directly for a builder mortgage company, I guess it has a mortgage company. That's a good way to get experience on construction.
That's not where I'm coming from.
Okay.
I'm more interested in developing the relationship.
With the sales agent?
No, with the builder. How
builder?
do you interact with your builders, for example?
I guess we usually we have our company, Crestar, does an annual builder forum where we'll have a national speaker, a couple speakers actually. One that would be like talking about the economy currently, another one talking about marketing, and we'll invite the builders to that, and we've had great success with that. The last one we had was at the Ritz-Carlton in Tyson's Corner, and we had 60 builders and sales agents come to that. Beforehand we have a light breakfast, networking, talking for about an hour, then have speakers talk for an hour and a half with questions afterwards. We have marketing material for about our company and about real estate finance. And it's a great way to renew relationships, and you can get to talk one-on-one with the builders. So that's been very successful for us.
Yeah, that's successful. I like that, and that's something that I think people out there could take heart to. You don't have to have a large company to put on a seminar and put a couple speakers together that are experts, and it's not even done necessarily in this field. I have a friend of mine who works for Instanet in New York, and they do not take a position with either the buyer or the seller. They are a supplier of services to transact the stock transaction, and they provide value-added services, et cetera, et cetera. But what they do is that they put on a seminar every year that's real heavy-duty. I've been to a couple of them. I got invited where they'll have a President Ford or President Bush or Powell, or they're really incredible, and they invite 30 or 40 of the very top people in the business that you, unless you do a lot of business with them, and that's the trade-off, there is no charge for this.
Right.
You cannot get in. You have to be invited. But in turn, these people go out there and they meet a president, shake his hand, get the photo, and then all of a sudden they just get gazillions of business. So it makes a lot of sense to do that. So this is done on a lot of different scales. I tell people who are listening to these interviews that I don't think I've ever done an interview where one new idea didn't pop up. We tend to think that loan officers do the same things by rote, and after you've said the top 5 or 10 things, that it's kind of all over. But this is a real good example. It's one I particularly like that has never come up, and I think this is something that, and the reason I like it is I've seen it work in other industries. And it also is something that does not have to be expensive. This can be put together at a local level and getting quality speakers, and where everybody has a vested interest in it, and to attract builders. And if you offer something that's quality, they will come.
Very true. It was excellent. We had David Luray, who is the chief economist for the MBA Association, speak at one. and he's a real good speaker. And, he has his own PowerPoint presentation on what the economy has done in the last 6 months and what he thinks it's going to do. And that always generates a lot of questions also on where the economy's going.
Yeah, well, they're very interested in that, and I remember they had Norm Ornstein, one of my I went to, and they get all these people out of the different institutes, that speak on economics, because they're out there. Everybody is looking through that crystal ball and wants to know what's going to happen 6 months down the pike.
Right, exactly. Very good.
In that vein, when you put this on, did you have more than one speaker or a couple
of
speakers?
Yes, we did. We also had a marketing speaker from the New Homes Guide, which is one of the better new homes publications that's out there right now. And I can't think of her name.
Renee Rigardi.
Well, no, it wasn't actually her. She worked for Renee. And it was one of their marketing companies, and spoke about, what some of the successful jobs have been doing at their sales offices. And so that was, the builders picked up a few ideas there also. So it was Debbie Rosenstein, that's who it was.
Oh, okay, I know those guys.
And she was excellent. I mean, she answered questions afterwards, and she tried to bullet the best projects in the area and why she thought they were the best projects, from a marketing standpoint. And so they picked up a few tips that way. So we did it from the economic side and also from the marketing side.
Mm-hmm. I also just kind of toss something out there, and that is, it would seem to me that if you have a fundamentally good concept, and the concept of putting on a quality seminar, I think there's maybe a lot of small companies out there where loan officers could put these together, and if they put it together right, they could go to their bosses and maybe even split the cost of a deal like that.
Yeah, I would agree with you.
I mean, really, if a small company puts up 1,000 and they put up 1,000 at risk, then you can really do something with that.
Very true.
What about? Do you have any personal relationships with builders?
Mm-hmm.
And what does that involve?
Well,
we don't need to name names, but what does that involve?
Well, on a social level, golf is. I enjoy playing golf, so I do a lot of entertaining on the golf course. People tend to relax a little bit more on the golf course and open up. And when you go out and play, in an afternoon, it's a good place to get to know people on a personal level. You'll throw in a few things about business and so forth, but you also find out about them and their families and what, kind of what makes them tick, and find out what they've got maybe coming up in the future, and, would there be an opportunity for you and so forth. So I use that a lot. That's always been a good one for me. I mean, and there's also the NVBI has functions. They have 2 every year, golf tournaments, which are a way to invite a builder to join you and so forth, or a sales agent. And then the MBA has golf functions, and you can invite people to that also. So I use both of those as an entree to meet somebody new, and then also just somebody that you want to get out with again that you haven't talked to in a while. Mm-hmm. That's always been useful.
Anything else you do?
Another thing that I do, which I enjoyed.
And we do have winter.
Yeah, we do have winter too. Is during the summertime, I've got a couple builders that really enjoy going down the Eastern Shore and eating crabs, and that is, when you eat crabs, it's very social. You're talking the whole time. I do that usually twice a summer, inviting 5 or 6 people to go with me, and we drive down just in an afternoon, like on a Thursday or Friday, and you leave around 2 and you get back about 7. But that's always been enjoyable.
It's interesting you say that, because I now live in a historic section at Cambridge on the Lower Eastern Shore.
Right.
And you'd be surprised in the summer. I mean, the crab houses just get packed.
Yep.
Really, the finest crabs there are in the world.
That's right.
Come out of the Chesapeake Bay, no doubt about it.
Yeah, we go right across the bridge there to Kent Island.
Yeah, right, exactly. Okay. You're spitting distance from me.
Yep.
Let's once again, I'd like to focus on the builder relationship. What is it that builders, because there is a downside to working with builders too. I think all of us that work with builders felt that they're under a lot of pressure, especially with construction loans. They can be very dogmatic. Tell me some things that that a loan officer, I think, has to be cautious with in dealing with a builder.
Well, most of the builders,
So not all good guys, I guess, is where I'm coming from.
True. Have either worked for somebody for a long time, but they're highly experienced, and they don't mind. One of the reasons I like working with builders is, rather than realtors, are they know every house can't sell and go to closing. There's going to be mistakes, and that's because they've been doing it for so long that it's going to happen as long as you communicate properly and tell them this one's a problem. We're probably not going to get it to closing. They're usually fine with that. They just want to know ahead of time. So they want to deal with somebody that will communicate quickly, and they got to resell the house. They have to resell the house. It happens. When you deal with a realtor in that situation and a house doesn't go through, they may not get to sell that house again because they've got to find a borrower for that just house. So they lost something larger, and they tend not to forget as easily as a builder. So that's one of the things. But so they need to deal with somebody that knows the lingo of new construction. And what I mean by that is with new construction, if there's common areas, there has to be a completion bond. You've got to know that it has to be done prior to settlement. There has to be a final inspection on houses. Depending on what time of year, there may have to be an escrow held. You've got to know how to deal with that. So you do need some experience on the new construction level, what could come up and what could be a problem before settlement. And
Can we talk about, just for a second, I want to stay right on that subject, but compliance inspections. Do you think some of the compliance inspections are, and setting aside, 2 times or 1.5 times, some of that is going by the wayside?
Well,
I say that because I know a bank that has worked a couple deals out where they really went to their investors and said, the escrowing for grass, that this is stupid. It just irritates everybody. The values in the home, why do it?
Right.
And some of the investors are now rolling over and saying, yeah, you're right. Don't worry about it.
Right. I think it's all who the client is. We do the same thing when we have a client that's been around. We know he's going to finish the house. If it's a couple spot loans on somebody we don't know, we want to make sure the house is finished. But I still think it's on the whole, it's usually required of at least. If you're closing houses during the summer and they don't have the landscaping done, there's something funny there. If they have a real good reason on why it can't be, like it's rained for 3 days straight, well, that's fine. We won't hold an escrow on that. We'll say just get it done as soon as it's finished. But normally it should be finished, and that's how we look at it. So we do make exceptions on that, though, depending on the customer and our relationship. So I would say it's relationship. I haven't seen it where people are just moving away from it. Maybe I'm missing something.
Mm-hmm. Do you keep, if we can go over a little bit to the other side now, and how you run your business? Do you have a contact management system? Do you have assistants to work with you? How do you work with your processors?
Well, on a subdivision, I have 4 loan officers that work for me that we, depending on the size of the subdivision, we will team up to make sure the subdivisions are attended to each week with communication on interest rates, so rate sheets and/or new programs, and then also status reports to the builders, which we do every 2 weeks of a project that has, we're talking over 15 houses where they actually need that time of attention. So we basically have a meeting once a week with the loan officers that work with me to review the status reports, and then they have a meeting with the builders every 2 weeks. So that utilizes it. As far as management of the individual cases, it's done at the same time with our processor when we review our reports with the builders. So we go through to make sure those things are in place, on time, appraisals ordered, or updated if it's taking longer than 6 months. So,
how do you get a status report to a builder? Do you fax it or email it? Or
we have been faxing it, and/or a lot of them like to still meet in person with the sales agents because everybody's there. You go through the list again, and we give them a new report every 2 weeks, so they can see what's changed and what hasn't changed. So
you think sometimes being face-to-face helps create a bond?
Yes, it does, and that's that way they know they're getting special attention. So I like to do it in person as long as time permits, and usually make time.
What about, do you go to settlements?
For the first-time home buyers, I normally do. It's more important to them. They have a lot more questions. The the higher end, so forth, I have not as much. The borrowers, we give them, we have the HUD-1 done 2 days before settlement normally, so you have the questions answered ahead of time. So I have not done that on the higher end projects.
Mm-hmm. What about settlement attorneys? Do you have any relationships with specific settlement attorneys or title companies?
Yes, that's a good question. There's probably 3 or 4 title companies that primarily do the new construction, and
in your area,
in our particular area,
mm-hmm.
and they're a good source of one particular one. We always go golfing, and actually I'm going to be doing this next week with one of the larger title companies that deals only pretty much in new construction, and we kind of just trade what's going on, who they're dealing with right now, so forth, and what they think is happening, any opportunities that I might have, and so forth. And it also renews our relationship because a lot of my spot loans I send to this particular title company.
And what do they do in return for you?
Well, on this, when I also get invited to play golf with this gentleman, and he usually invites like a marketing person from another, from a company that sells new homes, and which they're not, always tied to one builder. They usually sell for a bunch of builders, and so I usually do that once a year with this particular gentleman. So it gives me, an opportunity to meet somebody else. People move around in our business, so you want to make sure you know where people are going.
Mm-hmm. The builders that you deal with, do you find that you have a relationship with the same builders over years, or that you pick up some builders, lose some builders come in and out?
Yeah, they do. I have like 3 that I've been dealing with for over 10 years, and so we really developed a good relationship. When they have a new project, we go through what we're going to do for them as a lender, and why we're going to continue to do business with them. And I always have those. But builders do come and go. I have one builder that they're on their 3rd name in about 12 years, but I still do business with them. So they join partners with somebody else and leave somebody or go out on their own. And so you do want to continue to track them down. During the holiday season is when I make the rounds to the builders' offices and drop off presents and so forth to make sure what's going on for the next year, and also sort of recap what we did during the year.
Mm-hmm. The builders that you're dealing with right now, do you have a mix of small and large builders? And actually, where I'm really headed is something a little deeper than that. Are you finding that a lot of the builders now, especially as they get larger, that they're setting up their own mortgage subs?
What we're seeing is they're doing what we call joint ventures of sort. They don't really want to get in the mortgage business, but you can set up an
affiliation,
a partnership of
sure.
sorts. And that is what we're seeing more people do because, except for maybe this year, the margins were thinner than normal because of the competition. The increase in the cost of supplies for them went up dramatically last year.
Yeah, their drywall really took a jump.
So their margins were much smaller. They'd already sold their houses, and so they weren't making as much money. So they're looking for different ways to make money.
And what ways do they employ to do that?
Well, we have our company has a couple different ways to deal with that. I don't really want to go into it completely because it's something that's ours alone.
Yeah, then we'll skip that entirely. I actually wanted to focus on there. Are you finding that some of these builders are they paying some of the closing costs to steer people to a particular mortgage company?
Yeah, that's pretty much the only way that you can get people to deal with one lender is to pay closing costs.
Mm-hmm.
I mean, why
I would think you would try and encourage that, right?
Yes,
with your builders.
That's really it has to be if you're going to do a service for them from a construction loan to a project approval, and there has to be closing costs paid to utilize to get you the loans directly to you because
right, and that's not really steering because the consumer has a decision they can make.
That's correct. That's correct. It's just it's very competitive from a loan standpoint. All the internet companies and so forth are out there.
Can we talk about that for a minute?
Yes.
Unlike the realtors where you do see some impact with the internet, I've gone over this many times in interviews, and so we won't go directly into that as it relates to realtors. But what about on your side? Because you're dealing with sophisticated purchasers in your area, are you finding that they are using the internet as a research tool before they hit you?
Yeah, I do, and I actually I encourage them to do that. I tell them, you know, price is not always the most important thing, because what's happened with these internet companies, they have not done a very good job on the back end.
That's true.
They have not hired the people that get the loan approved, you know, efficiently and on time. So all those companies have lost a lot of money because they basically have the lowest quote, but they don't close the loans. I had one particular one in a subdivision in Oakton, Virginia, you know, $575,000 sales price. They went to an internet company, got a better deal than I was offering. They could only appraise the house at $550. The appraiser that they used, so the borrower was doing only 10% down. You know, he didn't have the extra $20,000 to put down. So he came back to me. I got it appraised and closed it, you know, with it on time. So,
Scott Cooley, who's president of Contour Software, he wrote an article. I thought it was a pretty important article. I think I've referenced it once before, and that is he did a major article on internet companies, and one of the points that he brought up that you've kind of verified just in this conversation is the fact that with these internet companies, they can take the deal and they can give you the price, but they still have to process that loan. They don't have the built-in. They don't have an advantage in built-in efficiencies when it comes to processing. I mean, you know, stuff still's got to get done the same. You still got to get an appraiser out there, and a lot of these internet companies too, when you're comparing their closing cost estimates, they're throwing extra fees and stuff in there to make up for that price.
That's a good point. That's where we really see the difference. The rate and points might be lower, but they'll have more fees. That's how they make it back.
Yeah, I know somebody that in another interview we were talking about this, and when he gets that situation, he immediately counters with, here is a list of my closing costs. Go to them, don't tell them what mine are, and ask them what, get it in writing what your closing costs are. And almost invariably they're getting back with much higher fees.
That's correct.
And he ends up getting the deal. Do you think you're going to see more of an internet challenge when in your business in the future, or do you think it's more going to be for informational purposes before they come to you?
Well, I got to believe we will, because I think every business is going that way. I think what's going to happen is that they're going to have to pay a little bit more to get better backroom people that can actually work these loans out. So their price might not be that as much better as it is right now, because they're trying to generate pipelines right now, but they're not closing that very high percentage of them. So I think it probably will. It's going to be an alternative. I think it's Fannie Mae, Freddie Mac, when they finally get it to the point where, a credit score is the key to getting the loan approved exclusively, I think definitely it will be internet then.
Mm-hmm. Well, there's going to be there's a lot of people who know a lot more than I do that seem to feel that they're going to really the numbers that I'm seeing are that they're probably going to max out somewhere between 15 and if God shines on them and blesses them, 25%. But people still, and this is my point, people still want to deal with a real live body. They want to sit across the table from somebody and be able to call them at 12 at night if the appraisal comes in low.
Right.
And with an internet company, you're just not going to have that.
That's true. I think the real A-plus borrower will be able to still deal with the internet, but there has to be somebody else leading the loan through to the end, and that would probably, like you said, 75% of the loans, they want to talk to somebody. They want to hear it from somebody the same day.
Where do you ever get clients calling you back in your business?
Yeah, oh, definitely. I do.
I like to see go in it.
I have a database that I have started building up.
What do you use?
I use ACT.
Yeah, I do too.
And it's a good program.
Great program.
And I send out a newsletter 3 times a year, which just tells it's information about housing, financing, refinancing, and so forth, and which is a useful tool because people move from new homes also, and they also refinance when the rates change. So that is my database is probably right now about 10% of my business, and I'd like to build it up to 25%.
Mm-hmm. When you say it's 10%, is that mostly in terms of when there's a refinance opportunity, or because when someone sells their home, unless they're moving into the same area or moving up, you're not going to get those deals.
Well, it's that plus referrals. Like I just got a letter from a customer that I closed about 4 months ago, and we sent this letter out afterwards, sort of, ask to rate how we did, and was there anybody they would recommend, that might be buying a house. And he put 3 names on with phone numbers that he knows that are looking for homes. So that's a great tool for us also.
That's interesting. Yeah, it's the old, I interviewed somebody not that long ago, and they pretty much end every conversation they ever have with, do you have anybody that might be interested? And it's amazing the amount of business that he picks up from that.
Yep. And especially in times when the market is not as brisk. I mean, right now the sales are down, and then also if you look at the numbers from the MBA, loan applications are way down from a year ago, 23% down.
What about in new homes, though?
Well, what we've seen happen. There's no inventory. Everything's pretty much been sold for the next 6 months. So my pipeline is very good, but there's not much to sell in the next 6 months.
Mm-hmm.
So you got to look at.
So what are you going to do about that?
That's why I sent out a newsletter. I'm just sending one out actually next week. So that makes the phone ring for me also.
Any interest ever in touching the realtor business again, or you kind of wash your hands of it?
I have 3 or 4 that I do still do business with. I've done business with for over 10 years. You have to have other sources, so there are contacts that I have that I am going to look up because there isn't that much right now for sale in the new homes. Mm-hmm. So I don't think you should ever say never.
What about, I'd like to switch and just ask you on a personal basis, because we're getting near the end of our interview, how do you manage stress?
How do I manage stress?
Yep, I'm kind of throwing that at you left field, but
yep.
You just raised an interesting situation where a lot of homes are sold right now. There's not a lot of inventory. It's one of these things where you can be staring into the dark wall of a closet saying, what next, Mama?
That's true. Well, managing stress, I think, has a lot, at least for me, is the more organized I am, and when I feel I'm not being organized, then I basically go through all my old pre-qualifications from loans, and I have dozens of them. Well, I will go through those, make a list, follow up on those, and when I get organized, for some reason I don't feel as stressed. I feel like I'm on top of the game again. So that's one thing I'm going through right now is just cleaning out all my old pre-qualifications, following up with those people, find out if they bought a house, and then also if they haven't, then that's when you ask for the business. Do you know anybody else that's buying a house? It's a great opportunity to do that.
You deal with any CPAs or attorneys?
Yes, I do. My own CPA, who I've been my CPA for 20 years, has been an excellent source for me for referrals. He deals small businesses primarily. So I'm always getting very interesting deals, by the way, when they're self-employed people. But they have money, they just don't have a lot of income. But we do have a fair amount of no-income verification loans that I use. So that's always been a good source for me also. That and little custom builders. We have a very good construction perm program, and I always have 9, 10 of those loans working in one fashion or another, either getting ready to modify the fixed or in the process of starting and picking their builder, because we have a good program there.
You mean a construction perm loan?
Yes, I do.
Where they go to one settlement?
They go to one settlement. We do the construction loan, and then we modify it when the house is finished to a permanent loan.
Mm-hmm. Just rolls over and saves costs and everything.
What I use it on is I live in Arlington, and people don't move from Arlington; they add on. So we do a renovation loan, and these additions are huge. I just did one that was a $390,000 addition to a house.
Wow.
So they're doubling the size of the house.
You don't hear too many that get that big.
Yeah,
that's a nice new loan.
That's one of the biggest ones I've done. Usually it's around 150 is normal addition.
Any final comments for listeners out there?
No. Well, I guess I should say yes. I think what I like about the mortgage banking business is the interaction. It's a new case every day, and you basically use your experience to figure out what needs to be done. But it's very interesting.
Yeah. Well, look, I want to thank you very much, Tom, for taking the time to talk to us today. I thought a couple of the points you had are really measurable in terms of things that people out there can do In particular, like your seminar idea, I thought that made a lot of sense. Very doable on a large scale and very doable on a low scale. And as I say, the people I talk to, if you can get one good idea out there, then it's been a valuable experience listening. So once again, Tom, thank you so much.
All right, John.